Okay, let's go. So good afternoon, everyone, and welcome to today's webinar. So we're delighted to have you with us on session, hosted in partnership with Leyton and Descartes. So my name is Jean-Daniel Vermette. Everybody call me JD. So I'll be your host today for the webinar and to this discussion. So before we dive into the content, let me just quickly introduce our speaker for today. So joining us, we're lucky to have from Descartes, Mudabbir Tariq, who's the manager, custom and trade consulting group at Descartes. And we also have Ted Rowe, director of business development and recovery solution at Descartes. And also myself, sales and head of custom duty from Leyton. So together, this team brings extensive experience in trade, customs, and duty recovery. So they've been helping businesses like yours unlock hidden saving through smarter and custom strategies. So a little bit before we start, just got to introduce both firms, Leyton and Descartes. So just a little bit about Leyton for those who may not know us already. So Leyton is an international consulting firm and global leader in innovation and tax-sensitive advisory. So we have more than 25 years of experience. We have more than 3,000 clients, employees, and more than 50,000 clients worldwide. We support businesses in identifying and maximizing financial opportunities from the R&D tax credit, grants, programs, energy efficiency incentive, state and local tax, and custom and duty recovery solution. So our mission is really simple, is to help company grow faster and perform better by simplifying access to a complex financial incentive. So in today's session, what we're going to cover, we're going to explore how businesses can uncover and recover custom duty overpayment using compliant and strategic methods, such as duty drawbacks, tariff engineering, post-summary correction, and other duty recovery strategies designed to maximize value and minimize risk, pretty much. So we'll also discuss real-world example, best practices, and how our partnership between Leyton and Descartes obviously can help your organization turn complexity into opportunity. So with that, thank you again for joining us today. Now I'd like to pass the mic over to our friend Ted Rowe from Descartes, who will kick off the session and dive into the topic. Ted, over to you.
Great. Thank you, JD. Thank you, sir. Welcome, everybody. We're glad to be with you. My name is Ted Rowe, as JD mentioned. I'm with my colleague Mudabbir Tariq, affectionately known as MT, much smarter than I am, but wanted to take you through a bit of what Descartes is here at a glance. As we mentioned, we're a partner of Leyton in reviewing duty exposure of importers in the United States. And what does that look like from a duty recovery / mitigation strategies? Descartes, we are a global organization. Our primary focus at Descartes, we're really grounded in technology and automation across supply chain and logistics. So everything from transportation and fleet management to routing and telematics, customs broker, forwarder, enterprise systems, how they run their businesses. And then where MT and I fall under is what's called the global trade intelligence pillar of the business, which I like to say really focuses on the movement of goods across the border. So, and again, with a focus on trade compliance. So everything from HTS classification, tariffs, duty rates, export screening is part of it. So really how to manage your trade as an importing company into the United States or in any jurisdiction in the world for that matter. Even more specific, Mudabbir and I we have the consultant group that looks at duty recovery, duty mitigation strategies, reviewing the duty exposure of our clients and looking for opportunity to recover, both recover duty, but also lower your exposure moving forward. One thing I'd like to touch on here is what I call the global supply chain conundrum. There's so many moving parts. It's obviously been a very interesting year with the new administration and the many changes that have happened in the world of trade. And so we look at this, and when I say moving parts, we look at a number of different, or I should say companies need to look at a number of different variables within their supply chain. So everything from complex trade documentation, many changes, new documents, new ways of doing things that are always, and they don't make it any easier. So keeping track of the trade documentation, compliance, manual and time-intensive compliance processes. So how are companies dealing with their supply chain, with their customs, with their shipping and logistics? Disrupted trade flows could be everything from looking for equipment to natural disasters to conflict, as we see right now in the world as well. Evolving customs requirements and technology updates, again, very relevant in this day and age of what's going on. I mentioned bad actors and parties, trade compliance especially, and I say trade compliance in quotes because it is a very significant part of any program or any supply chain currently, even more so over the last year, and it's being scrutinized in a greater fashion. So making sure you're sending products to approved organizations, individuals, et cetera, is a big part of watching your supply chain. Transportation and logistics teams, many times doing things differently. And when I say that, that encompasses the multiple divisions. Many companies we work with have multiple business units. How are they operating either together or separate? How are they aligned? And then the one thing we really focus on is the changing duty. What are the changing duty environment, tariffs, HS codes, free trade agreements, etc. JD, we can move to the next one. So all those the complexity or the moving parts, as I say, within the supply chain have just become much more complex. I leave Brexit in here, even though we're a few years removed, but it still resonates even right now on the changes geopolitical that are affecting the supply chain can affect your imports, your exports. So as we say here, it's addressing a new European order, which is even changing right now with the conflict in Ukraine to be added to that. All you have to do is read the news and or listen to it. How are global companies dealing with AI, machine learning? How is that going to affect companies moving forward? Trade wars and pandemics, we got out of a pandemic, we're in the middle of trade wars right now. Again, more complexity that's entering the supply chain. And then new and evolving trade agreements. How are they either simplifying procedures or in some cases, how are they complicating things? So we look at all these complex issues, again, that are affecting importers. What we have here is, I like to say, well, what's the consequences of not dealing with the complexity? Obviously, disproportionate supply chain disruption. So is supply chains we've seen over the last few years, and especially through the pandemic earlier, is what happens if supply chains get changed, switched off, blocked, anything of that mean? What does it mean if you're not dealing with the complexities of that? Obviously, penalties, whether that be financial or otherwise, that can be applied by CBP or other customs authorities, can lead to customer dissatisfaction, brand reputation, obviously driven by late service, by social media that's out there, missed market opportunities. And then what we're really focusing on is the duty over payments. How can not dealing with these complexities, not engaging internally or with a third party, affect your supply chain from a duty exposure standpoint? So what is duty recovery? As it says here, duty recovery is a process of uncovering and recovering customs duties over payments. what I always say, it's not necessarily about finding mistakes. That's a very small part of duty recovery. It's primarily finding opportunities, looking at ways to improve your classification, maybe the way you're doing things, how are you bringing in products, everything though within being viewed through the eyes of trade compliance. As JD touched on at the beginning, some of the things we'll look at here is, and just to touch on, tariff engineering. This says really scientifically adjusting the composition of a product. So how can you take a product at a certain HTS classification coming into the United States, and how can we change that product into a possibly another product altogether, or how is it presented in to the public or to the consumer? Again, doing that compliantly, legally, fitting with the HTS code. Post summary corrections, those are primarily where you are looking at some errors. Maybe a trade agreement was not applied for, classification was not done correctly. The CBP gives the importer an opportunity to review your imports, come back, file a post-summary correction internally with the CBP, in which they'll issue a refund of the duty paid. Formal protest, more getting into binding customs rulings, arguments around classification. You may have, or your representative, a different opinion on how a product should be classified. Some jurisdictions offer proprietary private information, whereas the United States, everything is public, but there still is opportunities to challenge some of those classifications and apply for a binding ruling in the form of a protest. And then the biggest opportunity that we see, or the US importers sees currently, is the duty drawback, which in essence is the refund of 99% of the duties or taxes of products that have been imported into the United States and then subsequently exported out of the commerce of the United States, or in some cases destroyed as well, or for obsolete material. JD? Great. Just to touch on the tariff engineering, as I mentioned before, it's really looking at the composition, looking at the product, what can be changed within that product to attract a different chapter of the tariff code or a different classification. A couple strategies as we put here, or examples: adjusting materials or the design of a product. In this case, adding drawstrings to reclassify a product as apparel. Sometimes bringing in multiple components and then putting them into a kit, for example, could change the composition of the actual product that has been imported but changed to go out to the consumer. How can you change that classification? And then some right down to modifying the product origin or assembly location. So that's really looking at the supply chain again, countries of origin. How and where are we bringing our product from that may be able to give us duty relief? A note here is, on the back, it was just it must be properly assessed. So again, trade compliance is at the core. So it must, as it says, honestly match the HTS definition to avoid a misclassification error. Okay, JD. Post-summary correction. Again, these are a correction of errors, misclassifications, undervaluation. This is a way that the CBP affords importers to make corrections internally, file them with the CBP that will then alleviate the duty or warrant a duty recovery of the original duty paid. They are filed within approximately 300 days, 300 to 340 days of the actual import. You have to file a post-summary correction. We'll move on to the next one. Formal protests, again, we've talked a bit about it, but a little more. Just these are usually filed after the opportunity to file a post-summary correction. It's commonly used for disputes or to bring up an issue to the CBP to have a discussion, if you will, on how a product, again, might be classified differently, to file a binding ruling. Just by the nature of the verbiage, a protest is a little more involved. Prior disclosures, again, just it's really making a claim on a prior issue that was identified. And then we'll get into the big one, is duty drawback. Again, if you're not familiar with drawback, it's been, especially since 2018-19 with the 301 tariffs, duty drawback has become a much more pursued, I guess, avenue. Created a lot of interest in recovering duty. Though it sounds very, I guess, simple in its concept, product comes into the commerce of the United States. As I'll preface it by saying, tariffs are meant to protect domestic industry. If that product is not staying within the commerce of the United States, for example, and re-exported, the importer has the opportunity to, is afforded the opportunity to recover the duty paid on the portion of the product that was re-exported. Again, product comes in, product comes out. Sounds fairly straightforward, but it is still a very complex issue. I always tell the story of being at a meeting in Washington, D.C. and listen to a CBP officer discuss duty drawback. And at the time, this was a number of years ago, and it's probably doubled or quadrupled, but there was, I think, $8.9 billion, let's call it $9 billion in duty drawback that goes unclaimed, eligible duty drawback that comes, that is unclaimed each year. And she said the reason for that is we make it so difficult to do. So concept sounds straightforward, but it is a very complex process to do so. So the most common type of drawback here is unused merchandise, or same condition as it's often called too. So product came in, you had 100 pieces of a product come into the United States. You either sent all of it out or you sent 50 pieces of it out of the United States. You can claim 50% on that product. So it's a classification, it's the same product. It's left the United States, you can claim that. Manufacturing even adds more complexity to it. So if you think of manufacturing as a number of products came into the United States, they were imported, they were made to build a machine, for example. So if record keeping and tracking is done correctly, you can assess the value of the products or the inputs into that new product that was developed in the United States. If that end product is then subsequently re-exported, you can recoup the inputs on a drawback of the product that went into that. Again, it's a much more complex process. And rejected merchandise is defective or non-conforming goods destroyed or re-exported. You have 5 years as a US importer to claim a drawback. So it does afford you, many companies who decide, especially now, that I want to do drawback, you have a 5-year window to go back. So it gives you the time to prepare, to put everything in order. One of the, obviously with the interest in drawback, there's a lot of companies that reach out, say, I want to do drawback. Unaware of that, you have to get what's called privilege from the CBP to conduct a drawback. And privilege is what you're essentially asking is when you're asking the CBP for permission, if you will, to conduct a drawback. In doing that, what you need to do, and this is where the Leyton team and Descartes work with our clients, is getting that privilege in the way of what's called a one-time waiver. So as I say, the Reader's Digest version of a one-time waiver is you need to tell the story. You need to tell the why you want to do drawback, how are you doing, why you're doing drawback, but more so, what does your supply chain look like? How are you importing? Where are you importing from? How are you tracking your imports? More importantly, how are you tracking your inventory and then out and through your exports? We have a lot of companies that reach out for drawback and say, I'd like to do drawback. Well, we say, well, how are you importing? How are you tracking your imports? Pretty easy. We have our import documents, our 7501 entry document, our bill of lading, commercial invoice. We put it into inventory. But then you ask, how are you tracking your export? And many have not. The essence of a drawback is matching. You have to match the import and substantiate that that import then left the United States, of which record keeping is a huge part of that. So part of that one-time waiver is working with the CBP, putting together a report essentially that we do on your behalf with your input that says, here's why we want to do drawback. Here's how we track our inventory. Here's the systems we use. Here are the documentation, the way that we export the product, and who is the exporter of record as well, so that we can make the case to the CBP that a drawback can be filed by the importer. To set expectations currently with the amount of companies interested in doing drawback and trying to get privilege, whereas it would take at times about 90 days to get your drawback waiver approved. It's now taking anywhere between 5 and 8 months, but sometimes they are surprising us earlier. But as the title of it mentions, it's a one-time waiver. Once you are set up and approved by the CBP to do duty drawback, you are able to do that on a regular basis. It becomes a much more repeatable process. There are cases, again, just to be very frank, there are cases too when companies call, they don't have their export documentation, but one of the things we can do is help guide them on setting up a best practice moving forward, that in 1, 2, 3 years, depending on the volume, what makes sense to come back and then conduct a drawback. So we can also have that conversation on making sure you're set up moving forward and tracking your products to substantiate your drawback. As such, as I mentioned, record keeping and what they call evidence is what the CBP wants to see, especially on the export side. So they do offer a lot of scrutiny on that. But again, in working with a company, a provider that is grounded in trade compliance, you can be assured that everything is done, again, through that lens of compliance. One, to make sure that with the importer is not put at any risk, as well as you're maximizing the refund. I will mention, as I have the ACE portal, some of you may not be familiar with the ACE portal. It is a free, no-cost portal, if you will, or service that the CB offers importers and exporters in the US. I think there's only about, last time I checked, 40-something% of companies actually take advantage of it. It is a great visibility tool. It is a great asset when conducting drawback in order to pull reports that help substantiate your claims, both on the imports and the exports. And short of having to go to your customs broker for a significant amount of information, it takes a lot of that work out of it. But any importer who does set up on the ACE account is very happy they did, just from the visibility it gives you as an importer. So, and please reach out anytime and we can send you the information for setting that up as an importer. JD, we can move to the next. A couple additional recovery strategies. Foreign trade zones, moving product through foreign trade zones. You're seeing a lot more of that now too. So it's basically a duty deferral program where you can set up zones, or similar to a bonded warehouse, where product doesn't technically enter the commerce of the United States, especially if it's transitioning through the United States to Canada, for example, or Mexico. It can go into a free trade zone to defer the duty or eliminate the duty if it's passing through. Otherwise, if once the product's pulled out of the FTZ, it is subject to duty. Obviously, preferential trade programs and refunds, something that we review extensively too in conducting a duty recovery analysis. Are you as the importer using all the free trade agreements that are available to you? If so, are you using them to your best ability or to their full potential? Often we find there are FTAs being used, whereas again, they're not being used to their full extent. So we can find some opportunity to reduce your duty exposure there on anything moving forward, as well as often obtain a duty recovery. The one you don't want to get into is the litigation and unlawful tariff recovery, but it's another opportunity to, again, litigate and look at duty recovery opportunities. So as far as is what we do, Descartes and Leyton, in looking at duty recovery and working with a company like ours, one, as I mentioned, we maximize your refunds, especially being grounded in technology, Descartes in particular. We're able to go into the data a lot deeper. We can look at small duty amounts as opposed to just focus on 5,500, 200, or 2,000, whatever it might be and above. We can go down to the cent level, which helps us maximize refunds for our clients. We'll always look at protecting your time limits on whether it be drawback, PSCs, protests. We want to make sure that we're addressing the oldest transactions first so that we can address those issues that might be expiring. So we protect those to make sure we're not letting any time limits go by. It's a free, risk-free, no-cost solution. Everything we work on is contingency-based. So it allows importers to get some, even if it's just some feedback on the duty they're paying, their imports, their HTS classification, their compliance. It allows an importer to engage us as a partner to review that at no cost, no upfront fees of any sort, and a gateway to high value benefits. Again, recoveries are one thing. Often the big, the larger implication and more beneficial outcome is the reduction in your duty exposure moving forward, the savings, the often competitive advantage in many cases when certain companies aren't using the information that's available to them. To say it's a self-funding duty recovery solution. It becomes an opportunity to review your imports with no risk to you as the importer. So there's no hourly costs, no expenses, no retainer fees or consulting fees or travel expenses of any sort. Quite real, plainly, I guess is the best way to say it. If we do not recover a refund for you, you pay nothing. So it's a risk-free way in looking at that. It's purely presented as a minor portion of anything that is recovered. So again, you'll never see an invoice until a recovery of the duty has been received by you as the importer. One thing we like to say, there's no need to work up a budget, though often it can create budget for you as the importer. In many cases, we're dealing with trade compliance groups who the general refrain you hear is they're understaffed, they're pulled in every direction, especially in the current environment with what's been going on for the last year. And they don't have budget, but they need neither, whether it be technology or automation or even headcount. Often they present it as, hey, I can run this through the trade compliance group, and if we can find budget, what can that be used for to enhance our trade compliance program or team or our supply chain in general? Just a brief look at how we review each client. Again, every every business is different. Every importer is different in some similarities, but it's really getting to understand the importer, the company. How are you doing things? So what we really do is we take there's no cookie cutter approach to how we review a duty recovery initiative. We first analyze the landscape, get an understanding of your products, the classifications you're using. We get certain reports that we can facilitate with your assistance, but get reports to really understand the business, how it's operating, countries of origin, product movement, etc. And then how is that landing in the United States and what's your duty exposure? From that, we can determine the best way to look at it. How do we approach it? Do we look at all the different angles that we reviewed earlier? What makes the most sense? How do we approach it from each angle might be approached differently at a different timeline. Obviously, if you can do a protest or post-summary correction or find a free trade agreement that warrants a refund, to file that refund, it eliminates the need to do a drawback moving forward. So many times we take that two-pronged approach as let's look at all the opportunities for recovery or actually to eliminate the duty on the initial import. And then as a second stage, we look, or in conjunction, I should say, we start the setup for a drawback, but then look at those transactions where drawback may be eligible. In doing this, it allows us really to maximize the refunds and the savings moving forward for the importer. So all of our clients are looked at, again, not through as an off-the-shelf practice. It's more looked at each individual, what makes sense for each individual importer that can maximize the refund. Just some of the benefits. Obviously, the cost recovery is a big benefit. It's found money. It can go right to your bottom line or be reinvested. Ongoing savings, as we mentioned, is often even the bigger benefit. We talked cash infusion, again, to assist in developing a trade compliance program in many cases, which again is becoming so relevant right now, which includes reducing your customs risk. So again, everything is viewed from a trade compliance angle. Should we see any areas where you as the importer may be at risk from a compliance standpoint, we can bring that to your attention too and discuss ways to make any corrections or if needed, and how to take the proper approach and again, making those corrections. Counsel on trade and customs issues. As I mentioned at the beginning, we really become an extension of your trade compliance team. I always say, even if we find no opportunity, the worst case scenario is we do come back and say, you know what, there's no opportunity for recovery, or if whether your drawback is available to you or not is looked at separately too. But even in doing drawback, you become a partner and can reach out to our team for compliance issues, opinions, new product lines, new countries of origins, trade routes that you might be dealing with, and you believe a classification is one thing, you want a second opinion, we can offer you that. And that's just an added value to the service that we bring. Often, depending on jurisdictions, you can find proprietary information or importers' rulings that can be utilized. And again, it really creates a relationship with the CBP as well. Some of our clients initially ask, well, what does this do from a risk standpoint to the CBP if we're looking at refunds, if we're conducting drawback? CBP really looks at it as you're doing your due diligence. You're working with a company, again, grounded in trade compliance, to review, get guidance, and correctly file any refund applications or drawback. Again, filing that the one-time waiver to get approval from CBP is done. So you have full, you're creating a relationship or an understanding with the CBP, the Customs Authority. And getting close here, just again, process-wise, first step is getting engaged, finding out more about your processes, your products, classifications, supply chain, etc. And then really it's getting the information. We need the data to do the work. So it's getting some guidance from you initially. We handle all the lift, but obtain your import information and data electronically, which will all be available, much of it through that ACE portal as well. So again, highly suggest getting set up on that if you're not. We look at your import documents. So a lot of it is looking at your 7501 bill of lading, commercial invoices, understanding the classification, origin, and all the aspects of that might go into reviewing the recovery, and then actually review the entries and bring those opportunities that we see to your attention. So it's something we come to you, make sure you're you're in agreement with what we've found, and we will file all adjustments on your behalf. Against areas, there are a number of areas that we view. We mentioned free trades, valuation, drawback, duty relief, remissions, end use in some cases. So we review every aspect of how we might mitigate your duty, but also find your recovery. Just a couple quick case studies that we did. This is an automotive company that we work with. It just really developed a focused drawback program. It's that initial setup, which is the big lift. And again, we work through that. We do 99% of the work on your behalf. We do need that guidance to the information to create that story for CBP to get approval. But once that's put together, you as the importer have a great understanding, and we support you in this, in how to track, how to record keep, what you need over each year to make that drawback more of a repeatable process. And one of the other things we figure out in that first drawback setup too is what's the cadence that makes sense in doing that? Is it every year? Is it every 5 years? It really depends on the volume. But in this case too, we were able to recover excess of $5 million. And again, full approval from the CBP. This is something we're working with a number of clients in the medical device industry as importers in looking at PPE. Again, was a big issue over the pandemic. But how are we able to present as more of what we call tariff engineering and use of how was the product being classified versus how that product operated, was used, I guess is the best way to say it. So we were able to change the classification and get accepted on that in this instance here, which was a big refund over a number of different medical suppliers of 40 million at the time. So it was very significant. Again, this is similar. This is in the chemical industry, binding rulings for ultimate tariff classification on clients' behalf. We were able to obtain a ruling, and again, this alleviated, I think, from 5%. Yeah, originally attracted 5% and down to 0 at the time. So it was a significant, again, refund. And then this one was one where we were able to calculate that this client was saving $1.5 million a year moving forward based on the alternate classification that they were able to use.
All right.